Hi, this is Ian Coleman from Signal Centre, and this is this week's video analysis for the FX majors and the dollar index going into the week 5th of August 2019. As always, going to start off with the dollar index, highlighting what chart formations we're seeing, then breaking down to the other FX majors, basically highlighting our support and resistance levels and what we'll be looking at for this coming week. So let's start off with the dollar index. Here we can see a bearish Elliott wave count to the upside, and then we've seen this very choppy corrective move higher. Now, always dangerous to try and pick the top or bottoms of the market, but we have got a few warning signs here. The majority of last week's initial gains got sold into. We've had this inverted hammer formation posted on the weekly chart. Now, that is often an indication that the upward trend has come to an end and we've got the start of a new downward bias. However, we've had quite a few false starts around this 61.8% fib level, so we're still pretty cautious about whether or not this is the top in the dollar index. If we go to euro dollar, let's start off here. This is the weekly chart, so basically the opposite of what we're seeing in the dollar index. We've got this 61.8% fib located at 111.80, but we have broken through that. But we've also seen some pretty choppy, mixed, volatile trading. Could be forming an ending wedge pattern, but we need to see a break of trendline resistance, which is located around about 113.50 to confirm that. What did we see last week? Well, all we've actually seen last week is a doji style candle, so that means that we opened and closed with little net change. Now that candle just highlights indecision really in this major currency pair. There's nothing really to say that we couldn't potentially move lower. If we go to this time frame, this is the daily time frame, so we've had these aggressive moves to the downside. Could it be seen as an A, B, C, D correction formation? Yes, it could be, but it's also stalled at the 161.8% fib, which is at 1058. A stronger move higher on Friday would have posted a morning doji star formation and probably highlight the base of the trend. However, we've got no clear indication that this trend is coming to an end. We're still seeing lower lows and lower highs. Early on Monday of this week, we've got some bespoke resistance located at 111.35. What I'm quite cautious about is that we haven't really got a lot in the way of support levels as far as we're concerned until 108.75, and that's very close to this 261.8% fib level at 108.40. So at the moment we still hold a bearish bias. Euro sterling, using correlation, offers a bit more of a negative bias than sterling as far as those two currency pairs are concerned. Euro yen is actually up against the trendline support, so these signals aren't strong, but initially we're still looking at selling into rallies in euro dollar. Cable, now aggressive move to the downside. Are we completing 5 waves? So we've got the 261.8% fib level at 120.33. We've had dips bought into, but again we've got pretty solid resistance at the beginning of the week at 122.62, and we'd need a breach of that level really to highlight that sterling is going to strengthen against the dollar, and we're perhaps seeing a topping in that dollar index. If we go to dollar Swiss, here we've got 5 waves to the downside. We saw that corrective choppy move higher, levels close to 50% fib at 99.65, found some selling interest. We've also seen a DMARC 13 count on this time frame. That highlights the end of a trend and the start of a new downward bias. Would we be looking at selling at the market on Monday? No, we've got some support located at 99.12. And I think we closed on Friday at 99.18. So again, we prefer to sell into rallies. Bespoke resistance is located at 98.86 on Monday. Dollar yen moving lower, aggressively lower now within this bearish channel formation. We've got trendline support at 105.68 we've got bespoke resistance located at 108, the figure at the beginning of this week. This is quite an interesting pair. Dollar CAD had an inverted hammer formation posted on Friday. Again, that chart formation often indicates the end of a trend and the start of a new downward bias. If we go to this time frame, 261.8% fib. This is the 4-hour chart. Possible completion of a 5-wave count. So 1, 2, 3, 4, and then up in 5. 261.8% fib, 132.62. Would we look to sell at the market again on Monday? Well, probably not, because we've actually got some bespoke support located at 132.01. We will see how it opens up on the European Open, but we've got some bespoke resistance located at 132.50. So again, looking for value. We prefer to sell into rallies and buying into dips for sure in dollar CAD. Sorry, Aussie dollar. Again, we've got some warning signs. We've got a doji style candle, so we opened and closed near the same level. If we go here or expand out, we can see that this mixed volatile price action looks to have formed an expanding wedge formation. Now that formation has a bias to break to the upside, but there's no clear indication really at the moment that the trend's come to an end. We've got 67.26 as trendline support. We've got bespoke support at 67.44. Again, on Monday, we've got some resistance pretty close at 68.25. So buying dips, selling rallies again is probably the call, at least at the early stages of next week's price action. Euro sterling. Now, we caught this one quite well last week. This is a breakout of a triangle formation, so we've got to be wary of this reverse trendline support, which comes in at 9008. But if we go to this time frame, we posted a DMARC 13 count up here. We actually caught this rally, or this corrective rally, late on Friday. I think it was at 91.60 was our trigger level. Now the reason why I like this is because the wave formations are lining up. So if we get a break of the previous swing low, which is around about, let's just have a look, swing low 90.89, then we've stopped getting higher highs and higher lows. We're probably going to start getting lower lows and lower highs. Why I like this formation is because the 261.8% fib is located at 89.20, and I've got some bespoke support at 89.20. So although that tells me over the long term that I should be buying dips in euro sterling around about here, over the short term it's got ample scope to move to the downside. Euro yen, and again, this is if you're fancying an aggressive in, if you like. Remember, we're not quite sure about euro dollar where we're going at the moment. We've seen that doji style candle formation. Dollar yen looks bearish, but just bearish on rallies. This euro yen possibly moving lower for 5 waves, but we've got this trendline support located at 118.28. Now we've got a DMARC 13 count in a short time frame, and this is, when I say a short time frame, lower than 4 hours. I believe it's a 30-minute time frame. Now that offers a DMARC stop at 118.04. So aggressive traders, if they wanted to, could look to buy at the market at 118.28 with a stop around those levels. I would prefer to sell into rallies next week than to blindly buy dips. 120.06 is where I've got bespoke resistance. We've got a 261.8% fib level located at 117.42. Okay, I hope you've enjoyed that analytical report, and we'll speak to you again soon. Many thanks.